The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 30th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that, just simply tools that empower human potential. Because, folks, each and every day, what you and I need to do, we've got to live up to our potential. And so we must master that each and every day. So let's begin with our empowering beliefs, words of wisdom brought to us by our extraordinary producer who makes everything we do seem so seamless here at TFNN, which I can assure you it is not. And these are words from Al. Al starts his day with this incantation. He starts off by saying, watch your thoughts, for they become words. Watch your words, for they become actions. Watch your actions, for they become habits. Watch your habits, for they become your character. And finally, watch your character, for it becomes your destiny. Great words brought to us by Al in the sound room. Thanks so much. Let's go see what the destiny of these markets are. Right now, we've got the Dow trading up 45 points, trading out at 15,784. S&P up 11, trading out at 1785. NASDAQ Composite up 45 points, trading out at 4,097. Russell 2000 up 8.5 points. Trading out at 11.31. Apple's up $1.40. Microsoft down 17 cents. We never did check in on Google. We're going to during this hour here. That's up $24, up 2% this morning. Cisco up 7 pennies. Intel up 2 cents. Google is not leading the charge. It's Alexion Pharmaceuticals now up $28. Google's up 24, Under Armour up 19. Carbo Ceramics in on the deal here this morning. They've stuck in here. CRR is the ticker symbol. They generated revenues of $164 million versus $153, so they beat their top line. Also beating their bottom line, net income of $20.8 million versus $19.83 out here. So they are trading up nicely. We'll go take a look at that stock chart, up 17%, $18 and change. Priceline in on the action, of course. It's trading out at $11.47, so you got the 1,000-plus club, and right now it is a neck-and-neck race. Priceline just slightly leading Google. Now, Google, I believe, is out with earnings after the bell today. Maybe somebody in the den can confirm that for me out there. I believe that Google's out with earnings very soon, so should be some additional fireworks. Thank you to Peak D in the den, so Google out with earnings. We've also got Concur Technology, CNQR. That's up a nice 12%, $13 and change. Harman International Industries, HAR, up 13%, up $11. Interactive Intelligence, ININ, up $16. ServiceNow, up 19%, up $11. Man, some big movers to the upside out here. To the downside, we've got some big movers as well, percentage-wise. Allegiant Travel down almost $14, about 14%. It's traveling at $85. Newstar Inc. off 19%, down $18. ADT off $7, down 20% out here. So you got some big losers out here. Overstock.com getting overstocked, down 14%. They're trading off $4 here. We take a look at the metals market. We didn't take a look at currencies last show. Sorry about that. Let's do that this show here. Goldilocks down $20 right now, trading out at $12.42. Really needs to close today back above the $12.45 level out here. Silver's down 2%. It's off 39 cents, trading out at 19.15. It's up against a critical support area. Light sweet crude trying to take out a B point of an A to B equals CD to the upside. That would take it to about 98.40. I'm sorry, it's trading at 98.45. It could take it to about the 104-ish area. Natural gas pulling back this morning, down about 28 cents right now, down about 5% out here. If we take a quick peek across the globe, what do we have out here? Over in Germany, kind of a flat market. The DAX is up 13, 14 points, not a big deal. The FTSE also not that big of a deal, down about 17 points. Our call-in number, 877-927 6648. Give me a call, folks. We can take a look at your stock chart. Let's start off by taking a look at the indexes out here. Let's go see what we've got going on. We've got some reversal signals for sure. We take a look at the Russell 2000. The Russell 2000 put in that second three drive to a top pattern. This one most certainly worked out here, and what we have seen is a retracement, nearly the 0.786 retracement. You would go from the swing point low back on December the 12th out at 1099.67, all the way up to the high that was put in on January 22nd out at 1182. 04. If you go from that low to the high, you'll see you come to the 0.786 retracement level of about 1117 out here. Now, today's candle formation, this green candle here that took place on January 28th, that was not bullish at all. So that was not a bull. Just because it's green, it just means where price opened, where price closed. Green does not mean bullish, and red does not mean bearish. It just helps us to easily identify visually where price opened, where price closed. Then you've got the intraday spikes. Sometimes you have them, sometimes you don't. If you close at a session high, you're going to just finish up without any kind of wick or shadow. The names are interchangeable. In this case here, that candle was not bullish. Today's candle is a different story. Now, today's market is not over, but we do know where price opened. Inside the Russell 2000, it opened at 1130.35. What it also did so far during that open is it really didn't gap up, right? To a certain extent, it didn't gap up if you take a look at this, because you don't see any space between yesterday's candle and today's candle, right? Hey, let's take a look at the energy needed in order for the Russell to do what it actually did today. Because take a look at where it closed yesterday. If you're watching this on Tiger TV, you should be able to see my crosshair. If you're listening on the radio, your mobile device at TFNN.mobi, thank you so much for doing that. The close yesterday inside the Russell 2000 was at 1122.45. Now, that's not really what's is important here. Well, it's important to know that that's where it closed. If you take a look at where the candle actually opened yesterday, the opening price inside of the Russell was at 1129.50. So take a look at today what it had to do. Price really had to gap up from yesterday's close, right? In this case here, above yesterday's open. See how it is above yesterday's open? This is what's referred to as a bull separating line. Other than a island reversal, it actually doesn't get more bullish than that. Now, the trading session is not over today, but this candle here, this little small green candle, this one is a reversal candle as we speak right now versus this wider range out here. So that is inside the Russell 2000. What does that set up? That sets up, if we can see some follow through here, it sets up a bounce. Where can that bounce take you to inside the Russell 2000 index? Well, 1143.58, that's the no-brainer. That is the 0.382 retracement level. 1158 is the more logical area. That's your 0.618 retracement. And, of course, getting all the way back up to the open gap up here to the downdraft area of January 24th, and that was at 1164.77. That's how much room you could get in there. So if you are short, buy a TZA. Let's say you played the triples or one of the other ETFs, know that you got one of the most powerful reversal candles today. You might not have known that by taking a look at that green little thing out there, but what you actually got was one of the more powerful reversal candles if you were just paying attention to the index. Hey, if you were taking a look at the futures contract, which is what I really suggest that you do, then you could have filled in this whole gap of price and maybe you would have known other elements about what took place inside of the Russell 2000 after it closed yesterday. So that's what's going on there. The Russell 2000 has been, a strong leader out here, so it's important to understand what the strong hands are doing in the marketplace. It's sort of gotten crushed here, but of course that three drive to a top pattern shouldn't surprise anybody, because if that pattern works, price ought to get crushed because it is one of the more bearish patterns out there. So I hear folks on TV talking about, hey, the Russell 2000 is not acting the way that it should. Why is it doing that? So on and so forth. And I just kind of say, well, you got one of the most bearish reversal patterns when it made its high out here, and it did it on January 22nd out there, that three drive to a top pattern. Well, let's take a look at one of the other indexes that made a three drive to a top pattern. That would be your NDX 100. Now, the NDX 100 also has a strong bull separating line candle out here. So this, even though it's red, just so you see that it's red out here, that is a extremely strong, powerful candle that we have inside of the NDX 100. So even with the problems with Apple, and Apple even has problems as we speak here today, it's up 47 cents out here, you do have a reversal after, in this case here, the three drive to a top pattern, making the exact 0.786 retracement down to 34.6818. Now look, We'll go take a look at the ETF structure. We'll take a look at volumes out here. What's important for me to do is to express to you and explain to you what's going on, what the signals are, what the bulls and bears are signaling to us. This trading session is not over, but as strong as that candle formation was inside of the Russell 2000, that's nothing compared to, in fact, you might look at this and see that it's a red candle today, a small-bodied candle, and you might not really think much of it. Folks, that is extremely powerful because not only did this thing here gap up above, now in this case here we do have a gap, and in fact, if you were to take a look at what this did is not just gap above the high of yesterday, but it went ahead and it opened above the high of January 28th out there. So a very strong reversal candle with inside of the NDX 100. So what does that say? Where can the NDX 100 move to? And, of course, it is all going to be about certainly Google out here after the bell, because they're certainly moving the market here this morning, at least the NDX 100. Look, a natural normal bounce would take it to 35.30. You're almost there. You're 35.11. Intra-session so far today, you have hit the 35.20.80, so not too shabby there. 35.70 would be a normal move. I'd say 35.98.72 is likely where you would see the NDX travel to before it then begins. That would just really be setting up the C leg of the A to B, potential A to B equals CD down. We don't know if that's going to be the case because we're going to really have to monitor volume on this move up here. But two very powerful candle formations inside of the Russell as well as inside of the NDX 100. Inside of the Dow, not so fast. The Dow here giving you no reversal candle whatsoever. You did have a bullish engulfing candle that did show up here on the daily chart on January 28th out here, but that was completely erased yesterday. Right now, today, you have an inside day inside of the Dow out here. So no, not giving you any kind of reversal out there. So you can see you got the fight between the bulls and the bears. The bulls truly on the side right now of the of the NDX and the Russell. And in this case of the Dow and also inside of the S&P 500, that chart is, now that's not a good chart to look at. There's a problem with that chart. Let's go over to this new moon, full moon chart. By the way, today is a new moon out there. For those of you that did not know, so that coming in, I don't remember the time period, maybe about 5 o'clock this afternoon or so, I think, something right around there. But we do have a new moon out here inside of the S&P 500. This is also not a bullish signal out here today. So no bullish candle signal inside of the S&P nor the Dow. But so that's where our fight is. Hey, if that's where the fight is, let's go check out the New York Stock Exchange. Let's go check out the wider swath of the market because I don't know what it did. So let's go see what candle pops up on the screen here. Today, not a bullish reversal signal at all inside of the New York Stock Exchange. However, what the New York Stock Exchange has done, it went and visited that December 18th low out there. That was at 99.49.66. It has tested it twice. It has rejected that area twice. It has done it on lighter volume out here. You know the expression, if you can't bust them down, will it try to bust them up? 877-927-6648. Dow's at 49. S&P is up 11 points. We'll be right back.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 61 points. S&P is up by 12. And what we're looking at here right now is the monthly chart for the S&P 500. Of course, the month coming to an end tomorrow. And right now, if the price were to close out here around the 1786 range, we would have a bearish engulfing candle. We have not seen a bearish engulfing candle form inside of the Dow. Last time we saw one on a monthly chart here. Let me look back. Last time we actually saw one take place was all the way back here in May of 2010. Flash crash time out here. I'm not saying that we're having a flash crash, but that was the last time we saw an actual monthly bearish engulfing candle that actually formed out here. Now, in order for that to occur, you're going to need to see price close at or below 17. Let's see, the open of that candle was 1806.55. That's the number, 1806.55. Right now you're at 1786.35. So that's something for us to pay attention to. Now, at 1806, if we just go back, 1806, let's see if that is real. How achievable is that, and what does the S&P actually need to do? And we'll do that by going back to our full moon chart out here. And as we take a look at our full moon, new moon, lunar chart, I should say, if we go from the swing point high of January 15th down to the low of yesterday out here, the dead cat bounce is 1801. So that gets you pretty close, right? Doesn't get you there. 1820 happens to be your 0.618 retracement, and that would be a normal move. That would absolutely be a normal move to get up to 1820. And could that happen between today and tomorrow? It most absolutely could. And if it does that, folks, if it does that, boy, that eliminates the bearish engulfing candle. Now, you'd still have a what's called a dark cloud cover candle out there, but that's just like your weather forecaster, forecasting that, it might rain. And if you've ever lived in Florida or if you ever visited Florida, you know that if you listen to the weather forecast out there, that's really they're really just filling time, because those guys have got no idea. Because the weather patterns, being with the Gulf on one side, the ocean on the other side, they can change in a heartbeat out here. And so forecast of dark clouds just mean it might rain out there. So we want to be paying attention, because it is very doable on a bounce here. And very doable because of the short position, the short covering that you could see take place inside of the markets out here. So it's doable for the S&P to actually fight that off. Let's take a look at the Dow. Let's see what the Dow would have to do in order to do that same kind of routine out here. Now, if we take a look at the Dow, it too at this stage has a bearish engulfing candle. Last time we saw one of those, well, you could come back to the May 2012 time frame when it had a bearish engulfing candle. Of course, that was not too tough to do. It had a little doji the month of April 30th out here. So what is the number inside of the Dow? Well, if the Dow can get above 16,087 and a bit of change, so 16,087 is the number. Let's switch over. Let's take a look at a daily chart on the Dow out here. And at 16,087, and let's just go from where it started to cascade down on January 21st out here. We won't use the December 31st there, even though we technically should. So the number is 16,210. Let me go back because I don't remember what the number was. I didn't write it down. And so if we take a look at the open was 16. Oh, that's a very doable thing even for the Dow. So 16,087 is the number that it needs to get back above. And 16,087, well, at 16,019, that gets you up into the dead cat bounce, the 0.382 level. So we'll be watching the Dow. This will be very helpful in being able to identify for us, what is the potential for what's going on in the upcoming months out here, February, March timeframe. So that's the type of work that the Dow has to do. Let's take a look inside the Russell 2000 as well as the NDX. Now in the Russell 2000, right now it's got a little bear sash candle. That would also really require it to close below 1142.30. You're at 1134. I know for sure let's go take a look at it. I don't know anything for sure, do I? So the number here is 1142.30. Let me switch over. I should have a daily chart up here, 1142.30. So you just got the largest bear bullish reversal signal you could get inside of the Russell 2000. And the dead cat bounce gets you to 1143.58. So very easy for the Russell 2000 to erase its bearish candle out there. Of course, getting up to 1158 would totally erase that. Let's go to Jack in Denver, Colorado. Jack, thanks for calling. Thanks for holding. How are you doing this morning? Jack, do we have Jack on the line? I hope we have Jack on the line. Alberto, maybe you could let me know. If we do have Jack, I don't hear him. Oh, we're going into the break here. So Jack wanted to take a look at AEM. I wish maybe Jack, if you're listening, you can call in during this breakout here, and that way I know what it is you're looking at and how I can help you. 877-927-6648. That's our number to call. Dow's up 72, S&P up 13. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 80 points right now. S&P is up 14, and we didn't get Jack back on the line, but he wanted to take a look at AEM. I hope, Jack, you're listening in. I'll just take a look at the weekly chart here for each of us. And AEM right now has really been traveling in a consolidation pattern. If we take a look at that consolidation, let's take a look at the top of the consolidation. It's really where we had a gap down. This is a weekly chart, April 19th, 2013. The top of that gap, meaning the high of the weekly session on April 19th, is $33.73. You can see how that level has been tested a few times, how it has acted as a resistance area out here. That's an important area of resistance. So, that price range, maybe $33.56. If you're in the equity, if you're long that equity, just expect to see some turbulence as you get up there. Now, here's what is really noticeable on this AEM chart. Don't know that it will happen, but what you can see here is this has formed a very long-term island out here. And an island meaning because we had that gap down out here. Well, it's two-thirds of the island. What you'd really love to see is you'd like to see AEM get up towards the resistance area, get up and stop somewhere underneath 30. To really do it, somewhere underneath $33.73, and then come into work the next day, or maybe it is the next week or what have you, and see it jump over this area here. see it jump over this icy area over here, because then what you could have is one huge island reversal. I mean, huge and big. This would be one for the textbooks for sure out there, and that would be on AM. Don't know that it's going to happen, but I do know what it is that we should be looking for. So that was on AEM. Back to the, we haven't taken a look at the ETF structures out here, nor have we looked at currencies. We got a lot to be able to take a look at here, especially with everything moving in the marketplace. So I did say Google. So let's go check out Google, see what we have going in behind the move here. They are out with earnings after the bell, so it looks like they have sold off from that initial pop out here. In the case of Google, still they did move higher. There's still, even though it's a red candle out here, still very strong, powerful candle. 1.1 million shares going into 3.9, so it's got some volume. The swing point high's got 1.5 million shares from January 22nd out here. This is going to be important for us to watch Google. Of course, it's got a open gap down here at 974. Anything could happen. That would be one heck of a move down. Now, if you're watching us on Tiger TV, I'm going to give you this one here for free because of course, I give you pretty much everything for free. All you got to do is just tune in, right? I don't give you everything. I only give you a lot of stuff, but not everything. In the case here of Google, I've got each of the earnings dates. In fact, as long as I'm out here, I might as well put the next earnings date on the screen, which is going to be today. So we've got what is today is January 30th, which is my daughter Shay's birthday. So happy birthday, Shay, out there. I don't think she's listening in, but do want to wish her a happy birthday. She certainly changed my life out here. So this is going to be earnings date. Now, the reason why I'm poking this in here is that Google, so we'll just lay it out here. We'll put it on here. Google happens to be one of these stocks when on earnings dates out here, what tends to happen is whatever direction the market trades in on earnings date, it continues on in that direction thereafter. So from a short standpoint, if no matter what the numbers are, it just simply impacts the market negatively, and you see it gap down tomorrow, what that's telling us is that Google's got further to go. Very rarely do you see it not trade in that direction. Now, the question would be, where does it open? Where does it trade to? You have to look for normal areas of support. In this case here, if it were to trade lower. Likewise, if it trades higher out here, this will be setting up its next A to B equals CD pattern out here by taking out the swing point high of 1167.89. And if it does gap up and it does that, that says that Google will continue to move higher versus come back and try to fill that gap. Maybe at some point in time it comes back to fill the gap. And no better analysis than taking a look at the 1017 gap out here. So earnings came out that night, and it gapped up the very next day. Here's where, in essence, the earnings were after the bell. But here it is at the bottom of the gap and just simply continued to move higher. So in the case of Google, it has a very interesting personality with regard to what happens. And I can't tell you why. I just know that it does, and that's the beauty. And I've got all of the earnings release dates here on Google on my system out here. And it's just simply a pattern that just works. I wish it worked like that on every other stock out here. It doesn't, but on Google, it does out there. So you can absolutely use that one for your trading styles out there. Let's go take a look here at, let's take a look at the currency market. We have done nothing to take a look at the currency market, so let's go do that. Let's start off with the queen mom, the euro, U.S. dollar. Let's go see what it is doing. This is going to be that weekly chart. So you can see just how well this the cone of silence that from Get Smart, I believe, that the euro is traveling in. You want to talk about other beautiful patterns out here. It doesn't get any prettier than the euro-U.S. dollar on the weekly chart. And this shows us that the descending trend line, the descending channel line from back in 2008, that is the red line going across my screen out here. Just how well that has acted as resistance. Likewise, the blue price channel along the bottom has also acted as a support level. And that's where the euro-U.S. dollar is moving down into. So, what's the price level? I don't know exactly. It's probably right around 135.4 something, where the euro ought to break that level. And it just continues to travel with inside this very narrow banded range out here. and that is on the euro-U.S. dollar. You know, we've been watching that and have been mentioning that it becomes difficult to trade this unless you're on a very short-term intraday charts out here, and then it tells you when you want to be looking for intraday long versus intraday short type trades just by playing this pattern. But soon we're going to get a break of this area, and that will provide us with some additional information on the euro. Let's take a look at the Great British Pound out here. Great British Pound doing everything that it can to try to break that longer-term consolidation zone, but, you know, each week gets up early in the week and it makes its move higher. This is week number week number 5 that it has been trying to break through that area. It just keeps trying to chip away. Let's go see what it's doing on a intraday chart out here. And this, again, is the Great British Pound U.S. dollar. So it's a 30-minute chart that we'll look at here. The 30-minute chart here broke its little rising price channel out here where it had made a 0.618 Gartley buy pattern. That Gartley buy pattern. Now what we can see here is it looks like it's forming a little downtrend channel inside of the Great British Pound. We'll draw that in momentarily. Right now it looks like it has also maybe turned into a butterfly. So let's go draw that pattern. Let's get rid of this one. Let's get rid of that 0.618 Gartley buy pattern. Let's go see if this actually created off of the same swing point. By the way, let's go see if this created a little butterfly buy pattern now. And, you know, pretty much did. Didn't make the 1.272 expansion, but got pretty close out here. You saw a little hammer candle that came in. This candle right here at 5:30 a.m. was not a reversal, but this one was, and that was at 6 a.m. You had a hammer candle. You had some follow-through inside of the butterfly. Now what we ought to see is at least the dead cat bounce of this entire move out here. That move would take it to, well, it's already done that. So the dead cat bounce takes you up to 165.13 out here. It makes that move. No bearish. In fact, what this is actually setting up here, it's setting up a continuation pattern. This candlestick right here at 9 a.m., big wide-ranging bar coming into that 0.382 level. That tells you what? That gives you a piece of information that says, hey, you know what, I probably want to go to that next level. That's when it says, I want to take it to the next level, baby. Well, in this case here, with that next trading sessions, the following 3 trading sessions, we're in the 4th one right now. In essence, you've got small-bodied candles traveling with inside the body of this candle. Now, a true rising 3 candle would occur within 5 trading sessions. However, I've learned that the Japanese, even though that's what they referred to it as, I've learned that it doesn't matter if it takes 8 or 9 or 10 trading sessions. A continuation move is going to be a close above. You got either the conservative play or you have. So if you were in this trade here, here's what you would be managing and looking at. You would be watching either the close of the 9 a.m. bar, which was at 165.06, or you could look at the high. That would be the more conservative approach, 165.08. A close above that on a 30-minute bar. We're not there yet. This 30-minute session will not end for another 17 minutes out here. 17 minutes. And if you do get a close where it's at right now, you actually have the continuation pattern inside of the Great British Pound that says it will travel or should travel up to the 1.655 level. That is on the Great British Pound out here. I did say that looks like potentially a descending price channel that it could be now forming out here. The angle of that is somewhat questionable, I believe. Let me see if I start with this bar out here. Can we get can we get several touch points out here? Where would we get at least 3 touch points of opens and closes out here? Yeah, you're probably right about there. So that becomes your resistance line. We'll just use that, the red diagonal line going across my screen. That becomes resistance. So in this butterfly buy, you get this close, as it should continue higher, and it should find resistance at that red diagonal line on my screen. We'll leave this on the chart out here. We'll come back. We'll certainly take a look at it tomorrow and see how this pattern actually went ahead and completed. Let's take a look here at the euro. Now, the euro-Japanese yen really has not been doing anything. That's why these markets here just kind of haven't yet really found their legs, so to speak, out here. So this thing has just really been traveling sideways out here. So not much to talk about inside the euro-Japanese yen. Inside the U.S. dollar-Japanese yen, a little bit of a different story here. This was the descending price channel we took a look at yesterday. I believe we drew this in live on the air. We could see price moved right down into it. And that was at about 3 o'clock yesterday afternoon. So now what we are seeing here is a bit of a bounce. Looks like an A to B equals CD. Looks like a Gartley pattern, a Gartley sell pattern trying to unfold here. Your A point of the Gartley pattern is going to be the low at 230. That was at 101.83. Your B point is going to come in right here at the 3:30 a.m. time frame this morning. That got up to 102.52. Pulls down, creates a hammerish-looking candle at 4:30 this morning. Your 1-to-1 A to B equals CD. You basically have come close to completing. However, take a look at this move here along the C to D level. This says to me 102.99 is more likely the outcome for the U.S. dollar, Japanese yen. If we take a look at what does that do for us as far as a Gertley sell pattern, here is, we're not going to use this pattern here. We're going to come all the way up to where it looks like to Stevie this wants to trade up to. And, that'd be about a 70% retrace. Let me see if I can. Okay, there's a 786 right about there. So there's really our range here for the U.S. dollar, Japanese yen. So it looks to me like it wants to target about the 102.99, 103.03-ish type area out here. No other real candle formations that are going on at the moment that we need to be paying attention to. That is on the U.S. dollar, Japanese yen. Let's go check in on Goldilocks and silver, see what they are doing right now. You've got gold trading down $19 at $12.42. Gold broke through its rising price channel out here. That is not a good sign. Price came back and has tested it now twice and rejected that area. You certainly want to see gold close above the 1242 mark out here. That is the largest number of co-located opens and closes, that general area on my 30-minute chart here for gold. That's a dark blue horizontal line you see going across my screen. Right now, we are not seeing a bullish snapback move whatsoever inside of gold. You do have a little bit of a bullish engulfing candle right here at 10 a.m., but that candle that it had to wrap is so small, that little spinning topish type candle that took place out here at 9:30. So it's really the body of this candle that is important, which was the 9 a.m. session. But right now, all that gold is doing is moving, is working off an oversold condition by really just kind of traveling slightly higher to sideways. But we got a lot of time left in the trading session, so we'll see what Goldilocks can pull off here. Silver down 34 cents right now. Let's go check in on the daily chart for silver. Silver did give us a nice bullish a hammer candle out here. That was at 9:30. That says that low of 18.98 is very important. I mean, it's very important from this point forward out here with regard to whether or not silver holds its lows. And speaking of holding its lows, it is this consolidation pattern, and thus far it still says, Stevie boy, I just want to consolidate. And that's what it is signaling to us, so couldn't bust them down. Maybe this time it tries to actually bust them up, and that would take us into about the $20.50-ish type area, about 20.50 or so, inside of silver out there. Inside of natural gas, I guess they were out with some inventory numbers here. Let's go see what. So natural gas here, we were showing the 0.618 Gartley buy pattern. That was forming. Of course, we said no bullish reversal signal, so that means you don't just jump in with both feet or any feet first out here. So we have not seen any kind of bullish reversal signal. We can see, though, on the 30-minute chart, it is now moving into that oversold condition out here, 0.786 level, right around the $5.07 area. You're trading at 5.13 right now. This happens to be the March contract for natural gas out there. Let's see. So what have we missed? Well, we got about 30 seconds in this before we go to the commercial out here. So we get back from the commercial. I'll go sift through the Tiger's Den here. There may have been somebody who wrote something in, asked me to look at it, and I haven't been paying attention, so my apologies there. Right now, the Dow is up 72, S&P is up 14, and we'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow trading up 71 points right now. S&P is up 14 out here. And the request was to take a look at Amazon. So let's go take a look at Amazon. Let's go throw up the throw up. Boy, that's not really that's not really good language out there, is it? Well, let's go toss up. That's not even many, but let's go take a look at the. Let's just do this over. Let's just take a look at the Amazon chart using the Rhodes Momentum Indicators out here, just to get an idea of what is going on. If we take a look at resistance inside Amazon on a weekly chart, that's the upper portion of the screen that we are looking at. That's a bearish engulfing candle that had formed out there. Of course, it's not getting any confirmation as we speak here today. They are out with numbers after the bell, so this is going to be an important equity to be paying attention to as well. It says resistance out here inside Amazon is going to be the high of that candle formation. That is at 408.06. If it trades above that, it will have taken out a resistance area, and it will continue to be off to the race. Now, on the weekly chart out here, you see it's a light blue area. Light blue is a strong bullish mode out here. I mean, strong bullish mode. You see that this has had on a weekly chart all these little red signals out here. Those red signals tell you nothing but buying pressure out here. Sellers have not had control inside. Well, let me just do this. Let me refresh the screen here because I've lost some of my, just the way it's trading. Why did it do that to me? Let me try to do this. There we go. This thing has not had any kind of selling pressure. Man, oh man, I really got to go back far in order to find any kind of selling pressure back here. So far, I'm not even going to go back any further out here. So on the weekly chart, no selling pressure whatsoever. In the daily chart, what Amazon has done here recently is it has come back and it's tested its 50-day exponential moving average. It did that on the, looks like the trading session here. Let me get my crosshair out. Makes it a little bit easier. Amazon came down and tested it on January 27th. Tested it as well yesterday on the 29th. It's trading a bit higher here this morning. If we take a look at volume inside of Amazon, I got to switch over to the chart. Sorry about that. If we take a look at volume inside of Amazon, we'll go back to Home Depot if I've got a minute here. In the case of Amazon right now, it's up today with 1.6 million shares. Had a little bit of a downdraft as the market did January 24th. That had 4.5 million shares, but we've only been trading for an hour and nearly an hour and 30 minutes, so this has pretty decent volume to the upside inside of Amazon. Inside Home Depot, I just had put that chart up there. It was on my screen. I was taking a look at it. You know, Home Depot has fallen back into its consolidation pattern. That's the yellow box you're looking at on my screen. This says to us, let me just run this tool out here real quick, see what the retracements are. So we're down to about a 0.786 retracement off of its last swing point, November 8th, and pretty close to 1.272 expansion. So it should be finding some pretty decent support here around the 76.50-ish area. And if it fails here, and even if it doesn't fail here, what this pattern is actually telling us is that Home Depot may trade all the way back down to the bottom of the consolidation area around $72. And if it can move down there and do it with volume of less than 9 million shares, less than 10 million shares, it actually sets up a nice buy if you're looking to add a pretty strong stock to your portfolio. It is in the extreme oversold condition out here on this move down. So, a move sideways could certainly work off that condition out there. Folks, stay tuned. Basil Chapman is up next. It is Terrific Thursday. That means we've got Larry Pesavento taking a look at all the commodities out there. Daryl Martin, David White, and Andy Heck on Thursday. Yeah, we got Andy Heck on Thursday. The Tom O'Brien Show. Real quickly here, watch the markets. Watch these this descending price channel inside the ES mini. You got the ES trying to break out above that. That'll get the attention of anyone that is short. Of course, the NASDAQ futures is doing everything it can to buoy the market higher. Looks like it wants to now head to 35.29. Have a great Thursday, folks. Be safe and stay warm, and I'll see you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.